So just to let the listeners know, welcome to the crypto podcast. You'll find all our episodes on the cryptopodcast.org. We're actually live today. We're on BitChute, uh, YouTube, and Facebook. So, or not BitChute, on Rumble. So for those, I'll go in and add the show notes later. And today, my guest, Chris Baldry Churio. He's the CEO and founder of Construction Coin. So AI, real estate, and blockchain pioneer. Please welcome to the show.
Hey Roy, good to be here. Thank you for having me on.
Yeah, no problem at all. So I'm interested in this because, I've studied construction economics. I've done a load of construction. I've seen the good, the bad, and the ugly. I've had over 100 court cases relating to everything in that because I know what construction is like. I'd like to know a little bit more about yourself, Chris, first, because obviously we're going to go through the company and what you're doing, but what's your own
Sure.
kind of background?
Yeah, sure. So, funny enough, my background didn't actually start on the tools in construction. Although I was in the property industry was my first professional foray at the early days of my career. But I spent some time in the military. I founded a recruiting business post-military in e-commerce and technology, which is essentially services, professional services, but workforce-based professional services. And then I founded a consumer products business with members of my family. But I've been at the helm of a few organizations, so I've got lots of industry experience, lots of innovative ideas that we bring to market, and ConstructCoin is actually an amalgamation of opportunity and some need that we see in the market for a solution, and also riding the wave of change in industry, right? So looking at the prevalence of coins and tokens specifically, and what they can do for specific industries and the economy across the board, UK centric, and then what that means for the rest of the world once we're up and running.
So I'm curious. It's coin with a K and not with a C. What's that
Right.
about?
Well, it's a marketing thing. It really is a marketing thing. I think, as with all things, you're looking for a point of difference when you're getting started, right? And we've got some really cool USPs with our offering and the actual use cases that we're bringing solutions for. But when we talk about our presentation now, it's how do we stand out? There was no other motivation for that difference, but just making it look and feel slightly different, but having the same meaning.
So with this podcast, I always try to gear for one, those that understand, but there's a lot of people that don't. There's
Mm.
very little that are using blockchain technology and crypto. So I'd like to kind of simplify it as much as possible so we're catering for everybody. With what you're doing, you're basically you're kind of removing the bank and the people are coming in and they're getting a return on investment. Would that be correct?
That's one way of looking at it, yeah, for sure. And that's definitely our message to our global investor pool, right? It's giving you the opportunity to be the bank. And look, the simple analogy is this. Properties come and go. You know, houses, flats, commercial premises, they're built, they're demolished, the space is reused for one of those three. Um, Property developers come and go. The one consistent thing throughout all of that is that the people that make the money, property developers make money, they lose money, right? But the banks always make money, have always made money from property. That's a fact. And when we look at the opportunity that the blockchain presents from a security perspective, from a integrity point of view, what that means in terms of the passage of information, the transfer of information, and the ability to build solutions that benefit all is where what we essentially have built Construct Coin around. And it is that ethos that you can invest as much as you want or as little as you want, but you can derive the same benefit as a bank.
So I suppose let's kind of take through the whole process. So first of all, you said invest as little as you want. So because I know there's some companies that are trying to do this, but they're looking for more big players. They're looking for people putting in, 10K, 100K and everything. When you say as little as you want, person with $100, can they actually come in and buy some?
Yeah, absolutely. So look, the full disclosure is, we're in the early stages of our launch, right? So we've just completed a private round where we pulled in private equity to acquire developments in the UK off chain and start the commercial model that we can bring on chain. But what that means for our token is that investors can purchase depending on whether they are crypto holders or whether they're using traditional currency, because you can purchase our tokens with both fiat and crypto. You can purchase as little as $10 in our tokens. Our token is pegged to the value of USDT, which is a stable coin. It's a secure stable coin that I'm sure most of your listeners will have heard of. And you will receive the CTK token equivalent of what you pay based on that exchange. So we make it as easy as possible. And I guess, what we're really advocating and illustrating, so people have an understanding of, is the opportunity to benefit from the appreciation of that token as we push through our pre-sale process and move towards our token generation event. So in simple language, as we move through those milestones, the value of your token will increase. And if you've invested in day one, by the time we're at day 50, day 60, day 100, your token will have increased in value and you will have therefore made money.
So with the payment, because you said USDT, I
Mm.
saw just from looking at the website and everything,
Yeah.
Ethereum, then there's AED via Zandbank. So is it when they're paying by Ethereum, you do the transaction, or they go in and change it to USDT? How and what's the
So
Zandbank one?
yeah, I'm not sure about the Zanbank one. I think that might have got cross-wires there, but we're on constructcoin.com first and foremost. That's our domain, right? And when we go live in a week's time, um, the public, subject to any regulatory restrictions you may have in the country that you're in, you can come to our website and you can purchase our tokens. If you hold crypto, you will be able to use your existing crypto, so one of BTC, Ethereum, USDT, Polygon, Sol, on those existing networks, and you can purchase our tokens based on the transaction amount that you stipulate, and that will be exchanged for the USDT value of our tokens. If you're paying with your local currency or with one of the major players, for example, US dollar or sterling or euros, the same will apply. Yeah, and we use a Polish company, funny enough, called Paybis to on ramp is the terminology, but to exchange your fiat currency with crypto, and you will be issued with the USD equivalent of CTK tokens, which will then be sent directly to your wallet or in your dashboard, which when you connect your wallet will download directly to your wallet. The tokens are locked until our token generation event. But you'll get from us what they will be worth at that point in time, and we go to great effort to try and give you that understanding as we push through our pre-sale.
And like, because I saw that there was one company, construction company, like a housing project that you kind of, prior to doing this, you've kind of making sure that the system works. You're liaising with them.
Yeah, yeah,
When you're, I suppose, expanding, because the fact that I've done a lot of construction myself. I've built 30 apartments, I've built houses and everything.
yeah,
It's a kind of minefield out there. There's a lot of
sure.
like, so what I'm kind of saying is it's different when you're hands-on and you're there and you're watching or you know that builder and you're going, all right, we can
Yeah,
trust
yeah,
these guys. But if you want to expand, there's a lot of corruption in all levels. So
yeah.
how are you protecting the token holders when they think, hey, this looks like a good one?
Yeah, I love the cynic in you, but that's a real statement. The real statement. That's the reality of it, right? And construction does have that stereotype. Let's not be confused about the realities of life, right? Look, in the professional world, there's no trust. It's all validation through third parties and regulated bodies that involve professional accreditations and certifications, right? So break that down in terms of what that means. First of all, we created an MVP of our lending product with a specific developer that builds family homes in the southeast of England. In that time, we've qualified a number of other developers who will take from us the opportunity for us to invest and provide them with construction finance to go out and deliver their schemes. But we use, for example, so there's the legal pass part of it, the solicitors that we engage with, the conveyancing specialists who are independent, obviously. We also work with the leading independent monetary surveyor in the UK that have over 100 years of construction prowess. Now, I'm not sure that I can name drop on the podcast, but they are the one that most construction finance banks use in the UK. They're an independent
Yeah, you
body.
can name away.
Yeah, a
Yeah.
company called Gleeds. So they're instructed by banks on behalf of the banks to provide full disclosure from a survey perspective in the appraisal process of a scheme. We also plug in to the land registry to planning portals, and we pull together a vast amount of data that is independently verified by the IMS process and the legal process. And the UK framework for regulation is pretty robust. I'm not saying that it's foolproof, but the standards that come out of the UK are, to a degree, they are blueprints for a lot of the world and the industries that operate around the world. And I think the regulatory route and the compliance route that we're able to follow means that we can plug into those standards. We use professional entities to validate every part of the process, and then we're able to make an informed decision. So our proposition is that we created an MVP of a lending tool that allows us to appraise all of that data. We plug into building information management software, which gives us to the penny costings that, again, in concurrent to our own analysis of the submitted cost sum analysis that the valuers will have also appraised. We're able to look at all of that data, look at the probability of success, and the human lending committee at the end of that process is then able to make an informed decision with the analysis being taken place. And look, the bottom line is this: is that we do not lend beyond 75% of the total GDV anyway. So there's a huge amount of protection afforded to investors in terms of the credit risk exposure. And as I say, the validation from KYC, KYB involving third parties to credit check both the business and the individuals, the requirement for a personal guarantee, the input of those appraisal parties from a independent monitoring surveying perspective, the input of the conveyancing process, all of those things together make for a very robust framework,
And I mean, a lot of people know that might have just flew over their head. But when you're saying you're making people personally liable, because that's why a lot of people, they'll open up the company, they'll catch people, and then they'll open up company B in the morning. So
Yeah.
when someone is personally liable, they won't be doing them
They're
tricks. And it,
accountable, right? Yeah. I think the days of that stuff are really gone when it comes to borrowing and lending money now. I think since the credit crunch of 2007, lenders have really, really bottomed out on personal guarantees, with the exception of what happened in COVID, right? Where governments around the world, I say around the world, but in the Western world, were stepping in to help. I think in Great Britain in particular, we benefited a lot from that sort of support, but that sort of support is non-existent now, right? In the commercial world that we're living in. And the idea of any sort of lending without a personal guarantee is a non-starter. I mean, it's a fact. Look, the other part of this is that this is all unregulated lending. It's commercial finance. We work outside of any sort of regulatory framework, but we do follow the processes as if we were regulated. And fundamentally, the need for a personal guarantee just means that, as you say, no one can just walk away, because within that submission, that know your customer, know your business, we are using third parties to credit reference both the performance of the business and the performance of the individuals in terms of their lending exposure and how they've performed in terms of repaying those loans. So it's not an easy thing that someone submitting a lending request for a particular development can walk away from. And then on top of that, you're looking at things like the obvious stuff like their track record. What have they already built? What is their build cost? And a lot of the appraisal analysis is looking at how have they come to those costs and being able to validate those costs. And part of the role of that valuation process and that surveying process is to look at those costs. And during the process, an independent monitoring surveyor would be validating that those costs, that brick didn't cost £10 as stipulated, it cost £1, so that you can't influx, there's just, you remove the margin for bad reporting fundamentally, the potential for bad reporting. And so our approach to credit risk is actually central to being able to deliver both security and value to our token holders. And every development that we engage in is fundamentally providing the security to our investor base. So it's not just about the AI piece, although that is a core part of our innovation, the 3 pillars of AI we have in our solution. The real world assets is the thing that gives our crypto project that fundamental security and that base plate, because every single token is secured to one of our developments, and that's all on chain. All of that documentation is verifiable, it's recorded on chain and linked to the issue of our tokens.
and are they fixed price contracts, or is there a price variation clause applying? Because it's all right if it's a one-off house and stuff like that, but if it's a big development and it's over a long-term frame, because like basically the price of metal, copper, everything can go through the roof. And sometimes they buy it in advance and they stick to prices. But if a builder's doing something and something out of their control goes up, so what
Yeah, so
way?
that's to do with the builder's profitability, right? So a CTK holder will never be exposed to the profit risk that a potential beneficiary, i.e., a developer, will have. We're making our money through ConstructCoin by providing that finance. So it's essentially a loan book that is earning interest per annum. And then in particular projects, we'll also take a profit share. It's just how those transactions have been negotiated. And in that instance, the margin is about us being on top of every part of those costs as if it is our own project. So to your point, we'll never have a situation where a developer can just run away with costs, because if they default on their loan, if they are not profitable, that is the developer's problem, not ours. Our point is to protect the position of the CTK holders, and that is through our security structure, where we have a first or check, second charge on the particular development, the entire scheme, because it's the gross development value, in answer to your question, that we're securing against. And in the event of default, we simply repossess. It becomes our asset, and that's it. We'll either continue the project or we'll sell the project. Now, 9 out of 10 times, that isn't going to happen. But in the event of a default, if it's not immediately if we're not able to remedy the situation immediately, then we will start a default process, and it's a repossession, and then we take charge, and we'll either continue the build or sell the asset. But with the credit risk exposure, you're talking about a 25% loss in value of the GDV before the investors are exposed. It's just not. It's the same thing that the banks do. So we've created a simple structure that enables CTK holders to benefit from the not just the lending, but the entire business model that we have to generate value for our token, which is about AI and real estate through lending all the way through to smarter homes.
I suppose just for those that wouldn't be aware of the whole kind of process, but when a developer, irrespective of their past history and everything, sometimes the banks still make them go through hoops, they change things and everything. So it's in their interest. It'll be a lot faster once everything is lined up. And if they're given the right returns, it's in their interest to keep it competitive, because they get to do 3 times more jobs in the long run, and everyone is benefiting instead of just the banks making all the money.
Yeah, 100%. I mean, the developers need the finance, right? We're able to provide it faster and more efficiently. That's the critical part of it, and to a degree, it's significantly cheaper than what you're paying traditional development finance. And I think the other part of it is how quickly a developer can sell those properties. That the developer is not returning that investment until they've sold their units, and most businesses will have a thorough business process to be able to start selling off plan or pre-completion, so it can move on to the next project. So look, the UK is facing a huge housing crisis. That's the other part of it that we haven't discussed. The government needs to build, just to satisfy the government's prerequisite, let alone the demands of the private sector, over 1.5 million homes in the next 5 years. So we're riding the wave of not only fulfilling the need, but fundamentally the provision of good quality housing stock with additional benefits like energy efficiency, like the ability to trade energy, the ability to earn from your home, smarter homes that provide a living environment that you can be proud of. We're literally rebuilding communities, building communities, and helping the next generation embrace home ownership in a way that until very recently hasn't been achievable. So not only are we playing a small part in contributing to solving the housing crisis, but we're actually helping bridge the gaps. A whole generation who feel they've been locked out of property ownership have a route to owning property in the UK, at their first properties in the UK, without having to sell their lives away. And that's through a co-ownership model that we're looking at, where the living space is appealing through tech, through the integration of AI into habits that are formed within your living space, and the trust that you build within your living space, versus just buying a house and having a mortgage, or struggling to pay that mortgage every month, or struggling to repay the deposit money that you've used to acquire your mortgage.
And is there plans for kind of everlast houses? Because I had a guy that was on one of my other shows that they're doing that in America. And it's basically that it's easy to modify things. So if somebody goes into a wheelchair, if they're getting older and they need to start living downstairs, banisters kind of built in, and bars and things like that. I mean, I suppose that depends on the developer themselves, but is that something that's coming into the UK?
Yeah, that's right. I mean, I wouldn't necessarily say everlasting homes because I think that the supply chain will determine what that looks like fundamentally. The developers we work with follow a very specific construction process. Some of those are traditional builds, some of those are timber frame. And I'd argue that those houses, that they will last a very, very long time. Last forever is questionable, right? But as habits change, as the demands of society change, who knows what that living space evolves to, right? But we can certainly see over the next 15 to 20 years how what we're building has a specific socioeconomic impact that's also about sustainability and being really succinct with the demands of the environment. So we're creating living space that people want to evolve, yes, but fundamentally be proud to look after and maintain.
And with like the smart contracts then, and like you've all the different companies that's involved in the building and the construction and everything. Ah, how do you see that going? Like the less steps that you have, the less bureaucracy, everything that you can remove, because most of the times things that slow up a project are city officials and everything like that. Can you see more people getting involved in this and city officials to cut out so much time that's needed to to do the building?
Yeah, so let's just remove one of those myths. So the bureaucracy in house building, which is synonymous with the UK, is tends to be in planning and the planning applications, right? And everyone who's been involved in property or heard about what happens in the UK on the news and whatnot will be aware of that. We're talking about fully approved schemes that are good to go, full stop. So that's the first base. The second base is that when we're talking about the ecosystem that we're building through our protocol, that's about developers ready to roll out this innovation now. So we are pre-screening, we're partnering based on mutual objectivity, joint objectives to deliver change, be that through the provision of the housing stock or be that through the provision of housing stock that delivers real value to a specific demographic that we're targeting, who, for example, need to get on the housing ladder. Is there bureaucracy in that? There might be some when we talk about things like the energy efficiency and the ability to trade the energy that we generate through a scheme and then pass that benefit on to individual residents who occupy individual units through our token, through a wallet that is incumbent in that living environment that they can then export to a mobile device and take with them when they're out and about, right? That's the future of how a property that you own can make money for you through energy creation. Does that mean there's bureaucracy in there? Invariably, there's likely to be some. We haven't seen it yet, but the challenges that we're overcoming right now are partnering with national energy suppliers, the government's drive to integrate smart meters, how we can get ahead of reactive versus proactive thinking, for example, or proactive thinking versus reactive thinking in terms of what the benefits of a smart meter are. Doing stuff so that residents actually benefit, so they can plan ahead, so they can use AI to create an efficient living space so they can do things like control their climate to bring their costs down. They can do things like manage the water efficiency of their property, and optimize the usage so that it brings down the cost and penultimately or ultimately generates a smarter living environment that is personal to them, that breeds more comfort and convenience, that's good for the planet, it's good for the local community and good for everyone around.
And for the token holders, then, is there options that they can kind of come together as a pool, buying certain properties that would be rented out, and it's like say a management company
Got it. Yeah.
manage and they get a return?
Yeah, so you're talking about the fractional ownership. I think have you been reading our white paper, Roy? I think
Well, I've been looking at the website anyway.
so we are going to launch fractional ownership opportunities for international investors. So in the UK, the FCA stipulates that retail investors are not able to invest in fractional ownership opportunities via tokenization yet, but I'm sure that's going to change. What we're offering will be to professional investors, self-certified investors, international investors through an SPV that we've created. You need to be a CTK token holder in order to get into that, but you can essentially participate in a fully rented family home. They are mostly on corporate lets in super, super lovely, well, I say super lovely, that's a bit of a funny term, but in lovely locations in the heart of southeast of England, where the residents are corporate employees, long-term lets where there's a decent return and you become a part owner. So you become a fractional landlord where you're receiving a percentage of the rental income from that property, whilst it turns a margin through the provision of the space as a rental.
And say for the development and people buy X amount of tokens and then, whatever, say construction time can be from 6 months, say 2 years or whatever. Are they locked in then, or they can sell at whatever? Is
Yeah, that's a
there
good
a
question.
fluctuating rate in
Yeah.
that?
So that's a really good question. So we're in our pre-sale at the moment, right? And our token generation event is planned for the next year to 15 months. So much like some of the pre-sales that have been really successful in the last 12 months to 2 years, our penultimate goal is to position in the UK as a leading token. Now, whether that means that we're able to launch a stablecoin, where we're trading our token around the utility we're creating in the real world for our token to generate income for holders, um, that latter point will determine the time frame to our token generation event. But when we have our TGE, that is when token holders will be able to trade their tokens. Until then, we're in our pre-sale, building out our ecosystem, um, investing in more developments, deploying that loan book to bring in recurring revenues, and building out the AI ecosystem from the estate agency infrastructure all the way through to the smarter homes that we've just been touching on. So I would anticipate somewhere between 12 to 18 months that will have happened, and token holders will be able to trade via decentralized exchanges. But again, we need to see what happens with the regulatory frameworks, right? Because since Mr. Trump has opened up the US to stable coins, and the world is now, the institutions have been moving towards crypto for the last 12 months, right? Let's face it, the large players. There've been lots of tokenization activities. There's been a whole load more of organizations looking for real world utility to support the tokens they're creating, either for settlement of their own large balance transfers on an instant basis rather than days, or for additional instruments that they can trade on pre-existing markets. But the fact is, institutional money has moved towards crypto because we are centered from the UK, but taking a global approach to what we're creating. We very much want to align to the standard that the Treasury and the FCA will adopt, and operate within that framework for the UK market. But of course, it means that we can take a global approach, jurisdiction by jurisdiction, to what we can offer our investors elsewhere. Um, and that will also determine the speed at which we're able to establish our own network, our advance towards stablecoin and what that utility looks like. And of course, in that process, token holders being able to trade their token on exchanges based on market movement. And of course, as we're building our protocol, all of that adds to the provenance of our token because of the real world businesses that are driving revenue for the value of our token.
And I mean, obviously, it'll depend on where the investors are because every country's got their own rules. But will it be each individual is responsible if there's a tax element to it after the return is done, or will you be kind of holding it that it's
Oh, no, no, no. So
yeah.
every, just like any other investment product, right? Of any sorts. And let's move away from the investment narrative for a moment, because Construct Coin is still a utility token, but the crux of it is we cannot be responsible. No business can be responsible for the tax affairs of an individual. But governments are slowly moving into an understanding of how to, I guess, manage the tax schemes of individuals who are investing in digital assets across the board, right? So it'll be down to the individual to declare, their investments. And we wouldn't want to be seen to discourage people from doing that. But at the end of the day, if you make a choice to invest in any crypto asset of any sort, it's on you to disclose what your investment pools look like when you do your self-assessment or your returns on a jurisdiction by jurisdiction basis. And our prerogative is really just to provide our community with a solid opportunity, as we build out our brand and our business, which involves lots of businesses, and building the strength of our coin within our protocol.
And I suppose, especially with a lot of builders, sometimes it's more sweat equity and they've kind of built it up and worked hard to build up a company. But as far as technology work wise mightn't be, too into it, with the AI incorporating into that, you can reduce costs by a lot. I mean, if you do it right, is that something with the joint venture that you're planning to kind of you take over that side of things? Because sometimes people they get they go to the same place because they've always done it, whereas they could be
Of
saving
course.
30% if they're actually using this clever.
Yeah, so we haven't documented what we're currently developing with our development partners. There's two that we're working very closely with on exactly that basis. Look, there's a huge amount of opportunity in the rollout of AI, right? From automation through to efficiency. And I think what I'm going to be very careful not to do, because it's quite commercially sensitive, is not to break down the specifics of where we see the opportunity. But there's a huge opportunity in every industry. And I think rather than shying away and almost the apprehension that a lot of people have to embrace AI beyond the obvious use cases of search and search and result based learning. It's about how do we create some efficiency? How do we create an endless flow of information that provides some real advantage and can create positive habits that doesn't mean that you're disintermediating unnecessarily, or that you're able to strip a workforce or do people out of work. It's about how do you evolve the roles? How do you make more efficient use of people's time? It's not always about pursuing the profitability, right? Because, the profitability can come by building solid ecosystems where you have codependencies, and AI is just another dependency, let's face it. So it's about the utility of that AI and how we create that, as I say, that end-to-end flow of knowledge that can be used in a number of different circumstances. And you're right, the manual aspects of building, as an example of construction, allude to some of the reporting, some of the mechanisms that you need to be on top of. And ultimately, when you're talking about human beings, it's what do humans like to do? What do they not like to do when they're tired, hungry, or in the routine of having to do stuff? And in the UK in particular, we have health and safety protocols, we have reporting protocols, there's the structure and governance that you need to follow within an organization. So AI has a huge amount of utility just in that sphere. But you can say the same thing of every industry, right? And of every organization. So we've been looking very closely at what that looks like and how that endless flow of information provides benefit to everything we're doing within the protocol.
And is there kind of any long-term vision for saying buying projects that may have full planning permission and then kind of bringing in different developers, getting builders to do the pricing, but you'd have the investors getting the tokens to buy the site that has the full planning?
Yeah, so we within our infrastructure, we have the ability to main contract to development. And I think that's definitely something that will be on the cards when we talk about, for example, our smarter homes concept and how we take advantage of specific schemes where the planning consents have meant that things can happen a lot quicker. And the depth of the construction is less about groundworks and more about conversion. There's definitely opportunity in that regard, and yes, we would probably well there is such a case, right? But look, it's really about how ConstructCoin as a real estate utility can deliver returns to token holders. And our ecosystem is centered around funding development projects. And that could mean both construction finance and joint ventures. So the definition of joint venture covers what you've just mentioned. It's about the integration of AI into the sales process and lettings process within real estate. And that alludes to, a very personal real estate sales and letting experience, both from a developer point of view and in the secondary market. And then the latter piece around smarter homes. So, notwithstanding each individual business model, when you look at the ecosystem that we're building and have created, the overarching need to own the ecosystem that all of these different entities could work within is a big part of it. So if we have a development of our own that has been funded by CTK holders, it would make sense that every element that we can provide for provides a service into that ecosystem, because penultimately it means that the CTK holders benefit from that. And when we talk about construction, when we talk about sales and lettings, when we talk about the end product, there's a play in our own development for all of that, right? So it's a no-brainer that we would, but it would be remiss of me to say today that, every development we have planned, that is the case, because it simply isn't. Right now, it's about using our loan book, deploying that loan book, partnering with developers strategically, partnering with developers who we've appraised for scalability, and looking at actually how our deal flow enables some of what you've just mentioned, which is definitely in the cards for year two, for 2, 3. But it is not the only form of development that our CTK holders our community will be involved in, or have security through.
And I mean, there's also like the building management as well, because I'm not sure is the plan to build kind of, apartment blocks or stuff like that, but there's also a management of the area. And sometimes companies come in and they'll overlook that. And what I've seen, my experience is it doubles, it triples, and whatever, but that's potentially another kind of angle as well, because there's so many different things that are connected to property that can be all kind of added together.
Yeah. So our build process, in partnership with the developers that we're working with right now, is really about family homes. There are a handful of schemes that are in appraisal for later in the year that do involve multi-story, but what we're not talking about is skyrise. What we're not talking about is apartment blocks en masse. It's a completely different construction process, and of course, it means that you're exposing investors to different risk. It's not really where we are at. And I think that if we're talking about developments of that nature, then we'd be partnered with specialists that have those skills and disciplines already in place, and it'd be incumbent on them as part of the appraisal to demonstrate that they have track record and the ability to project manage, program manage the deliverable end to end. And yeah, it'd be remiss of me to say to you that we wouldn't do that due diligence, because of course we would. That's a prerequisite of what we are doing.
So this is not within what you're doing, but it's probably got a knock-on effect and it could affect it. And it's a pet peeve for me because I've seen it in Ireland, I've seen it in the UK, just from people I know, and Poland, so it's an international thing, is there's a lot of cowboys out there. So I'm not on about the developer to cheaply after checking, but a lot of times they'll have subcontractors or even individuals that come in. Because like I remember even in Ireland, it was guys they came from Poland to Ireland. They rented a house. A guy was teaching them how to plaster, and then they came out and went plastering. What I would love to see is a kind of ranking system, rating system, whether it's a subcontractor, developer, or the individual that stops this. Because sometimes people buy a home and they do the internal finish and they get a cowboy in there because they look at the price and they destroy it. Based on your experience with AI, with everything, can you ever see some system like that? Because there's a lot of people that are paying for that for the rest of their lives because of the cowboys that are out there.
Yeah, I think workforce management is a critical part of any successful business, right? And I think that the appraisal process that we employ involves a really thorough assessment of the cost sum analysis, which determines the build cost per square foot on every scheme. So in order to scrutinize that square footage, the cost of the building that square footage, you need to have an understanding of how that has been broken into different phases across the scheme. That's part of their appraisal, right? It's part of the valuation appraisal that the independent or the independent monetary surveyor would also be utilizing, and looking at how that developer would deploy specific skills and the costs associated to that is part of that review. What we can't tell people how to do is to run their business, but we certainly see how technology can provide the continuity of use of resource, both in white collar and blue collar roles. So professional roles from architects to planning consultants, all the way through to roles on the tools of blue collar workers. And that really is about developers who use the same people. There'll be lots of subcontractors involved for specialist skills, right? And you see that now with recruitment agencies that provide specialist resource to construction companies. But I think the matrix that you're really talking about is teams that are experienced working with a specific project manager, site manager, or construction company, and those teams are always reused. So that knowledge base of how to work for that particular brand transfers to the next scheme and then transfers to the next scheme for that particular brand within that construction company. And I think every developer has a slightly different approach. Some developers main contract to themselves through their corporate structure, others outsource that main contract and just project manage the build. But fundamentally, the same principles will apply, and it will always start with the scrutiny of that cost sum analysis on that build cost. And obviously, when you can pull that apart and look at how have they calculated that number, that's when you'll get into, who are the resources, where do they come from, and what skills do they have, and how do you back that up? And that's part of the appraisal process, as I say, for us. But I do think that technology has a role to play in how you can standardize some of that behavior. We're not at a point yet where we're documenting that, but it's definitely on the roadmap with one of our partners as to how we can use AI to simplify not only the storage of their information, but make the passage of their workflow a lot easier for their teams, and therefore create robust processes that allow for professional development, allow for endorsements, allow for accreditations, and that being something that their team can work toward, because that means that there's a thought process around professional development, career development, which in turn means longevity and almost the guarantee of additional work, and fundamentally keeps people motivated to work with that company. As I'm sure you're aware, subbies in particular is a very self-employed nature, very self-employed business by its nature. But businesses that want to grow, want to retain resource, and want to have control of costs. So ensuring that you have that structure, ensuring that you're able to offer those benefits, it's a win-win for every party if it's done properly, right? So that there are plans afoot to create structures that will enable people to do exactly what you say. But it's for the developer. It really is for the developer. What we envisage is much like a software company selling licenses to software, and it's about how do you create those frameworks that a company can easily adopt and roll out as a solution to some of those problems.
And with insurance, then, whether it's fire, theft, is it something that you insure that the builder has, or will you have additional insurance yourself just to kind of cover all aspects?
Well, there's always the professional indemnity and the usual insurances that you need to have, right? But of course, we have various policies in place which are standard in this situation. Um, but builders, as a prerequisite of their ability to trade, will have a whole host of compliance and insurance prerequisites that they need to satisfy in order to be able to engage in providing their services. So again, it works both ways, and the answer is yes. An overriding yes.
And I'm sorry, so this might have been before, but is there, if people are getting in, they go into a draw for a house or something like that?
Yeah. So we haven't actually started to really push this publicly, but I think I've put it out on a few things, and it is on the detail is not being pushed publicly, but we are offering a family home, which is essentially a raffle. It's a prize, and CTK holders who acquire a certain amount of tokens will be issued with a raffle ticket. And when that prize draw is run, whoever holds that winning ticket will win that home. It's that simple. So that particular unit is for a development down in Kent, and it's a three-bedroom family home. It's valued at just under 750K sterling, just under $1 million. Yeah, it's a great, look, for us, it's a great, obviously it's a lovely development and a lovely unit and lovely residential property, but it's a great opportunity for us to market what we're doing in partnership with that developer, and to really create some noise around a house giveaway. It's not a lottery, right? And we need to be very careful to not fall foul of those rules. But it is a promotional exercise. It's, look, we've arrived. This is something that we're doing. And it means that anyone anywhere in the world who participates in our pre-sale could get to own a home in the UK for the price of a few tokens.
And it doesn't matter. It's like it's not limited to you have to have X amount to be part of that
You
once
need
you
to
have a
spend,
token.
so you need to spend 1,000 USD in tokens, right? But in the grand scheme of things, it's that's not a lot. Now that purchase of tokens could be winning you a three-bedroom family home in the UK. So let's put it into perspective, right? Um, But yeah, so when we launch that, that's something that you'll see on all of our social, all of our email marketing. I'm not sure if it's been committed to any of the marketing press we've put out, that's booked to go out in the next couple of weeks, but you'll see it in our Telegram, on our Instagram, on our X, our Discord, all Construct Coin, the official Construct Coin, and just for anyone specifically looking at that or interested in that, just I always say you must come to our website, make sure you're looking at the correct handles via our website so that you know that you're on the right platform. We will never contact people directly. Other people might, brokerages and what have you, but always check that you're on the right channel before you engage with anybody about Construct Coin.
And the company then, is there you are the, I mean, you're the founder, but is there other directors, and what's the structure of the company?
Yeah. So I am the CEO, founder. I've got a great team of people around me who we will be disclosing face by face as we push through our pre-sale. We've got some really good construction people around us, first and foremost, who have been in the industry for a very long time. I've got some really smart financial people around me who they're contractors mainly, actually, in the financial world, people that are consultants who have sold their time in helping us build this ecosystem and shape it. And then my founding team are a mix of marketeers, entrepreneurs, people that who have done a lot of business in the online world from referral marketing point of view. And of course, we've taken advice from some of the founders of other AI projects that have launched successful projects, raised successfully to build out their propositions. And being in the sort of UK tech online world for the last decade, the access to consultants that I have is pretty good. It's including the e-commerce platform ecosystem where I've got people around me that have helped shape what we're doing. So I've got a really thorough. I think the gimmicky terminology is fractional fractional advisory team. And I've got some really good full-timers that we will be disclosing as we push through. But as part of our marketing exercise at the moment, it's myself, it's Adrian, it's Mikhail, a few of us that are, holding the fort. And our tech team is far and wide, right? So we've been supported by some really great minds in Israel, in New York, in South America, India, Pakistan. We've pulled together a lot of people to build this. And the truth is that we will always run HQ out of the UK because the central part of what we're doing has been about playing a considerable and significant role in helping to support the UK housing crisis. But when you think about the benefit of Construct Coin to the emerging digital currency ecosystem, it is about the philosophy of being the bank and bringing that to the masses and creating a secure and reputable investment opportunity for those that want to partake in the emergence of stable cryptocurrency. And we hope that Construct Coin, as we build out the protocol, will be a household name for players in those markets.
Excellent. Well, Chris, I thoroughly enjoyed it. I wish you the best of luck with it. And you might
Pleasure.
let the listeners know where they can find you.
Yeah, so look, thank you first and foremost, Roy. It's been a pleasure to talk to you, and thank you for detailed questions. You can find us at constructcoin.com, constructcoin.com. It's construct with a C, coin with a K. Our pre-sale launches next week, but you're welcome to come along to our site and have a look at what we're up to at the moment. All of our social is Construct Coin, so simply look for Construct Coin at Construct Coin. Always check, as I say, that you've checked the handle with what is advertised on our website, because there are a lot of unscrupulous characters out there that like to imitate, and we want to make sure that you have the best of experience with us. Look out for people talking about us on various crypto platforms and crypto press over the course of the next weeks and months. I've appeared in a few articles already where I've been talking about regulation, what have you, with Binance and Forbes and a few other crypto-centric platforms. And I'm looking forward to doing more interviews like this. So if they're all as engaging as yourself, well, I'm going to have a great time.
Yeah, no, I'll make sure as well. Just for those listening live, I'll update all the show notes as well as all the different platforms that will have the correct link, so that make sure, because I know that a lot of times people are out there to catch. So we'll make sure that we've got everything proper so that they can get in contact. Thanks very much, Chris.
Thank you so much, Roy. It's been a pleasure. Thank you.
No problem. So that's all for the Crypto Podcast. You'll find all our episodes on thecryptopodcast.org. You find everything about me, scan the QR code or go to roycollin.com. If you're looking to start a podcast or do a podcast tour, I help with that. And if you're looking for virtual assistants, go to va.world. I'm currently getting 50, 60,000 views per month with all my social media, and a lot of it is down to the VAs that I'm working with, so we can help you with that. Until next week, take care.